I recently heard that it can cost as much as $30,000 a year to raise a child in America. I have children of my own, so I know well the challenges and costs. Let me share everything you need to know about the tax breaks you can get for having children and dependents, because every dollar matters, and how and who does your taxes matters. I'm Mark Steber, Chief Tax Information Officer at Jackson Hewitt. If you have children, one of the best and largest credits you can claim is the Child Tax Credit. First, a tax credit increases your tax refund or reduces the amount of tax you owe. They reduce your tax bill on a dollar-for-dollar basis. The child tax credit has been around for decades and helps families get a tax break. Even better, you might even be able to claim the child tax credit even if you don't normally file a tax return. If that's confusing to you, that's because it is. Tax refund with no tax liability, you say? Yes, I say. So what you need to know is, if you have kids that are your dependents, then you might have a great tax benefit due to you. So what are the top things you need to know about who qualifies, how to calculate how much you can claim around this credit, what the benefits are, and what changes are there for tax year 2023? So let's dive in. What do we need to know about the child tax credit this year? This year, the child tax credit is worth up to a total of $2,000 per child. The child tax credit amount you can claim is based on your earned income and modified adjusted gross income. Also, the credit amount phases out when your earnings exceed certain thresholds. $400,000 for joint tax filers and $200,000 for all other returns. This means you can still get some money, but perhaps not the full $2,000 if you earn more. But those are pretty high bars, so if you have kids, stay tuned. What are the financial benefits of the child tax credit? Well, the child tax credit helps provide financial relief to help offset the responsibilities of raising children. The credit can increase a tax refund amount or lower an amount owed to the IRS. The tax refund you could receive, which might be higher because you can claim the child tax credit, could help cover child-related expenses like childcare, clothing, and food. So who qualifies to claim the child tax credit in 2023? You can claim the child tax credit in 2023 if your child is under the age of 17 at the end of the year, December 31st. This means that if you have a baby or adopt or foster a child on even the last day of the year, or really any time during the year, you can still claim the full credit as if you had the dependent throughout the entire year. And don't forget, you'll need a Social Security number for your child before filing your tax return. One oversight I often hear is people thinking just because they're not the child's birth parent, that means they can't claim the child tax credit. That's just not true. For example, you could be their grandparent, their aunt or uncle, or the child could be an adopted or foster child. There are basically 7 tests on who can claim a child on their tax return and receive the child tax credit. There's an age test, a relationship test, dependent status, a residency test, financial support requirement, citizenship, and an income limit, as I mentioned before. Still unsure if you can claim the child tax credit? Meet with a tax expert to see if you meet all the qualifications. Then you and your tax pro will fill out the 1040 and claim this credit. How does the child tax credit work, and how is it calculated? Millions of taxpayers qualify to claim this valuable credit, which reduces the amount of income tax owed to the IRS and can even boost a tax refund. Calculating is pretty easy and straightforward. Every eligible child is worth the equivalent of $2,000. Even if you're already due a refund with the child credit, you could get an even larger tax refund. For example, say you're already getting a federal tax refund of $1,500. But you have 2 qualifying children. Now you can get a refund of $5,500. And here's a pro tip. You can use the IRS publication 972 at irs.gov as a worksheet to help you calculate the child tax credit. But be cautioned, the publication, like most tax guidance at IRS, is in IRS speak, and it can be confusing, which is another good reason to have a friend in the tax business. You qualify for the child tax credit. How do you claim it? Well, claiming the child tax credit is pretty easy. If you meet all of the qualifications, you enter your children's information on the Form 1040. When you meet with your tax pro, provide them with each child's Social Security number and the correct spelling of their names. There is an extra form and some additional questions, but the main part is your child with a Social Security number, some earnings, the tests for you and the kid, and bang, tax benefit. What is the additional child tax credit? Well, the additional child tax credit is another confusing part of the child tax credit, but also very important. The additional child credit is not some other credit or extra credit, despite the name, but means an amount families can claim if the child tax credit exceeds their income tax liability. Meaning, if the amount from the child tax credit exceeds the amount of tax you owe the IRS, or your taxes go to zero from other benefits, you might still be able to claim the additional child tax credit. Basically, you can receive a refund for the excess amount even if you don't owe income tax. For example, if you're eligible for a $2,000 child tax credit and your taxes are only $1,000, you may add the remaining $1,000 credit to your refund. Zero tax liability, and you still get a tax refund, the additional child tax credit. It's very important to not overlook or make a mistake. The maximum additional child tax credit for 2023 is $1,600 per child. What is the child and dependent care credit? Well, this is not the same as the child credit or the additional tax credit, but it is yet another credit you get for having kids. You may be eligible for the child and dependent care credit if you pay for daycare while you or you and your spouse both work. You calculate the credit based on your income and a percentage of the expenses that you incur for daycare. The credit is worth up to $1,050 for one child and up to $2,100 for more than one. To claim the credit, you'll need to complete the IRS Form 2441. And before we end today, I want to rapid-fire answer some other frequently asked questions about the child tax credit. Is there an advanced child tax credit this year? Sadly, no. This was a special addition to the child credit that was only available for 2021 during the pandemic. How do I receive the child tax credit? Well, the child tax credit will be included in your tax refund when you file your 2023 federal tax return. It won't be in a separate check from the IRS as it has been in years past. Who claims a child if the parents are separated or divorced? The most common answer is whoever is the custodial parent. However, the person the qualifying child lives with for more than half the year can allow the other person to claim the credit if they provide a release, a Form 8332, for the other parent to include it with their return. What's the state 529 plan? Yet another great child benefit. It can save you money when it's time for your child to go to college, trade school, or a vocational school. Some states allow a tax credit on the state return for these contributions as well. To wrap up this topic, as a dad, I know all about the stress of raising children. It's one of the biggest joys in life, but it can hit the wallet pretty hard. Tell me in the comments section what your most surprising expense is with raising your child. If you found this video helpful, please give it a thumbs up. Subscribe to our channel for more valuable information and hit that notification bell to stay updated on all things tax. And schedule an appointment to talk to your tax pro about the child tax credit and other credits at jacksonhewitt.com.